Today we're going to cover another prop trading firm and talk about all the good and the bad, the red flags that you should pay attention to before purchasing these challenges. A lot of you guys have commented on previous videos that a lot of what I said saved you guys a lot of money and time. So as you know, make sure to subscribe and like these videos and make sure to share them with people that are thinking of purchasing challenges in these different firms, because we're doing in-depth reviews. So today we're talking about FXIFY, or some people call it FXIFY, and others call it FXIFY. Okay? No, I'm just kidding about the last one, but let's get started. So the first thing, as you already know, you know what? I'll even give an intro. So I'm gonna call them FXIFY. They are pretty big in the field. They have not have any issues until now with payouts, I can say. There are things that you should pay attention to, but in general terms, when you look at the top 10 firms right now, I would say that they're in one of these top 10 prop trading firms. So first thing, we want to check registration number, so they have it. Now they're based in the UK. However, you need to pay attention that they are part of FXPIG. So FXPIG is a broker, or more a trading firm, where, if you want to know the story, so FXPIG was a trading firm, or is still a trading firm and a broker, and then the company created a prop trading firm based on FXPIG. Okay, so that's in regards to that. So while you're choosing FXIFY, make sure to also understand more in depth about FXPIG, because in a sense they're kind of one of the same company. Okay, so they're kind of the same company. Now you need to pay attention that they are registered in Vanuatu, which is an island next to Fiji Islands. Now it doesn't mean that necessarily, you know, it's a scam right off the bat because they're based in a weird island. Trading companies need to have a license, and usually they choose a license in one of these companies where it's less regulated. Something that you need to pay attention to. Okay, it's something that you need to pay attention to, because when someone is based in the Vanuatu or has a license in Vanuatu, they are much less regulated than US companies or companies in Europe. So that kind of plays not really in their favor, but as I've said, until now, we haven't had any issues with them. It's something to pay attention to always with every firm. Where are they based? The FXPIG, the head company, is based in Vanuatu, less regulated, and you know, it's something to kind of look out for. The FXIFY is based in the UK with this registration number. You can look them up. So that's in terms of that. Let's get started with their challenges and understand a little bit more about the company. So first of all, they have 3 phases. Okay, now the first phase, it starts from 5K up to 400K. They have a second phase and a third phase, where on the one phase challenge you need to reach 10%. Daily loss is 3%, and max trailing drawdown is 6%. Now, as you know from previous videos, me personally, I don't like too much platforms with a trailing drawdown. If you don't know what the difference, make sure to check out my other videos talking about the differences between a static drawdown and a trailing drawdown. But again, it doesn't mean that I'm not trading on these companies, whether it's FXIFY or Apex Trader Funding, with also they have a trailing drawdown, but Apex has a 6% profit target, where FXIFY you need to reach 10%. So it's a big difference, and you need to take that into consideration. So if you're telling me, listen, I would take a one phase with a trailing drawdown, you know, Apex, you need 6%. In Apex, you need Ninja Trader or Tradeovate. We're here trading on FXPIG. So again, it's other trading platforms, you can say, but this is important to pay attention to. So first phase, trailing drawdown, minimum trading days 5, unlimited maximum up to 90% profit, split leverage 1 to 50. Very important, the leverage, because some firms will give you leverage of 1 to 10, which, you know, on certain assets will make it much difficult to pass these challenges and make profits on the live account. So 1 to 50, it costs $59, and it's a refundable fee, where on your first payout you get it back. all the way up to $400,000, where the $400,000 costs $2,000, and as I've said, it's a refundable fee. Same trailing drawdown, same daily loss limit, etc., etc. Next, two-phase. So it's a static drawdown. 10% first phase, 5% second phase, which is much higher than a lot of other firms where it's a static drawdown, and then you have two phases, and they'll offer you 8% on the first phase and then 4% on the second, or 5% on the second, which in the long run, these percentages mean a lot, okay? Reaching 10% or 8%, it's a huge difference. It might not look too much of a big difference, but it is. Every percent is a big difference. So that's kind of a negative, in my opinion, in terms of their two-phase challenges, where you need to reach 10 and 5. Max daily loss 4%, max drawdown 10%, static, minimum 5 days of trading days. It costs $59 and it's a refundable fee, where the $400,000 costs $2,000 and it's also a refundable fee. And the three-phase, you need to reach 5% profit target on each one of the phases. So 5%, 5%, 5%. Daily loss limit 5%, max drawdown 5%, and it's a static drawdown. The $5,000 cost $39 refundable fee, and the $400,000 costs $1,600. Okay, so that's kind of important. Now, something weird on their website, I don't know why they didn't pay attention to it. If it's a company that makes this much amount of money, and if you're on the FXIFY team, pay attention to this, because your articles don't work. You go to Bloomberg, doesn't work. You go to MarketWatch, doesn't work. Weird, okay? Now, Yahoo Finance and Benzinga work, which they are paid for articles. And it's not something bad. Every company does this, right? Companies purchase these articles because they want social proof, okay? So it's common. But why are these two not working? Not good, but okay, we'll continue with our review. Withdrawal on demand. For the first payout, traders can request a withdrawal on demand as soon as the first trade on the live account is closed. There's no minimum amount, no minimum trading days. Therefore, withdrawals are as frequent as every 2 weeks. This means that traders can choose to withdraw immediately or leave the account to compound and grow their account balance. Okay, I'm gonna more in depth in a separate video talk about the withdrawal on demand and actually show you guys the withdrawal on demand. So make sure to subscribe and check out the next videos on FXIFY. They have a trading dashboard that looks like this. Check out their spreads and other things. So that's kind of in general about FXIFY. I want you to comment down below your questions about this company if you've traded with them, and we'll continue more in-depth videos about this firm and other firms very, very soon. So make sure to check those out as well.